Good afternoon, ladies and gentlemen. The market sharply rose today, even with the release of the horrific April job report. Nothing can stop the steam of optimism inside of investors. The S&P 500 was up 1.69% today, while the Dow was up an even larger 1.91%. Looking at currencies, the US dollar lost steam at the end of the week, losing strength again today due to the horrific numbers seen in the April jobs report. Taking a peek at the sectors, we see the same story as what the market told us. Every sector was in the green today, as oil and gas led the way yet again. Consumer goods and telecommunications also did well, being up close to 4%. Looking at my favorite table, we see that small cap value stocks dominated today, being up more than 4.5%. Small caps as a whole led the way in gains, however everyone had a great day, following the general overall trend of the markets. Looking at the biggest movers in the S&P, no one had a better day than Helmerich & Payne, posting a gain of 13.51% during the regular trading hours. Helmerich & Payne is an American petroleum contract drilling company engaged in oil and gas well drilling and related services for exploration and production companies. Helmerich & Payne came out with quarterly earnings of 13 cents per share, beating the estimates of 7 cents per share. The gain can be attributed to HP being battered during the March sell-off, all while maintaining profits and a financial position that will allow them to last through the virus and oil crisis. The other biggest mover was Noble Energy, which gained 13.46% today. It is a company engaged in hydrocarbon exploration. Today's big price jump comes after the company announced earnings and plans to curtail production in North America. The company reported a loss of $4 billion for the quarter, or $8.27 per share. That massive loss was predominantly attributed to a $4.2 billion asset impairment it took on its onshore shale assets. Absent those impairments, adjusted net income was 18 cents per share. That actually beat consensus estimates of 2 cents per share. The biggest loser was Motorola Solutions, leading with a downward movement of just 3.63%. Motorola Solutions is an American data communication and telecommunication equipment provider that succeeded Motorola following the spin-off of the mobile phone division into Motorola Mobility in 2011. Motorola Solutions beat on earnings per share by 19 cents, but missed on revenue, albeit only by $10 million. And its revenue growth came in flat on a year-over-year basis. JP Morgan also cut Motorola Solutions to underweight. The other biggest loser was FleetCor Technologies. FleetCor provides fuel cards and workforce payment products and services. FleetCor was down 3.51%. Yesterday, they beat on earnings by 20 cents and on revenue by $25 million. Not much news was baked into this sell-off. Today, a record 20.5 million jobs were lost in the month of April, setting the unemployment rate to 14.7%. These numbers were all below analyst estimates. However, these numbers still set a post-World War II record, albeit still short of the all-time record of 24.9%, which was set during the Great Depression. Note that the peak unemployment percentage during the 2008 financial crisis was just 10%. A more encompassing measure that includes those not looking for work as well as those holding part-time jobs for economic reasons also hit an all-time high of 22.8%. That reading may be a more accurate picture of the current job situation, as millions of workers are being paid to stay home and thus not willing or able to look for new jobs. Despite the stunning numbers, Wall Street was poised for another rally Friday, and government bond yields were higher as well, all signaling optimism in investors. Taking a look at the RSI of the popular S&P 500 tracker, SPY, we see the RSI is sitting at 58.32. The RSI stands for Relative Strength Index, which measures the degree of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. Traditional interpretation and usage of the RSI are that values of 70 or above indicate that a security is becoming overbought or overvalued and may be primed for a trend reversal or corrective pullback in price. An RSI reading of 30 or below indicates an oversold or undervalued condition. This puts the current reading of 58.32 at a slightly overbought area, however nowhere near 70. This may signal that the market still has room to go up. Getting into earnings, we start with Cronos Group, ticker symbol CRON. Cronos Group seeks to invest in companies either licensed or actively seeking a license to produce medical marijuana pursuant to Canada's Marijuana for Medical Purposes regulations. They came out with quarterly earnings of 20 cents per share, beating estimates of a loss of 7 cents per share. This compares to earnings of 36 cents per share a year ago. Net revenue of $8.4 million in Q1 2020 increased by $5.4 million from Q1 2019. Seaworld Entertainment, ticker symbol Cs, is a theme park and entertainment company. It delivers personal, interactive, and educational experiences that blend imagination with nature and enable its customers to celebrate, connect with, and care for the natural world. Just based off the description of the company, we know that earnings were going to be very bad. It reported diluted losses per share of 72 cents on revenue of $153.56 million. These both missed Wall Street's estimates of 67 cents per share and revenue of $174.38 million. Note that revenue came in 30.4% lower than the same quarter last year, and their net loss was $56.52 million. SeaWorld officials did not say how long it expects parks to stay closed or when workers would be able to return. This may be a dangerous company to get in with, at least in the short term, as their current short-term assets are not able to cover their current liabilities, putting them in a situation where they just offered $227.5 million in senior notes due in 2025, which are yielding 8.75%. However, it may be a short-term play, as investors might buy the stock up due to states beginning to open up, which would help restore some of SeaWorld's revenue and get it back on the right track. Although, their RSI is at 56.74, so do not go thinking that the stock is oversold. That is all I have for today. Consider that as earnings season begins to wrap up, there will be less companies reported on during our earnings segment. Thanks for watching. I hope you all have a great weekend.